All right, all eyes on Washington, D.C., because we're not only watching this debt ceiling drama play out, but also this banking scare. It continues to reverberate. I want to bring in Bianco Research President Jim Bianco. And Jim, you know, I began the show sort of saying I think there's an overestimation of how strong the economy is. And one of the charts you put out today I thought was fantastic. It asked the question, are we confusing sales with inflation? Can you tell us more about that?
Yeah, there's two ways you can measure sales. One way is you can just look at the total dollar amount of things that people buy. And the other way is you can adjust it for inflation. If the price of stuff is going up, you're spending more dollars in the store, but you're not buying anything more. And when you adjust the price for inflation, we have not seen retail sales increase at all in the last 2 years, right when the inflation rate started to move higher. And I might add, Charles, that what also happened 2 years ago is if you look at wages or raises that American public gets, inflation started to outstrip wages. So prices at the store were rising faster than your boss was giving you a pay raise. And that's one of the reasons why I think Americans are not buying more things, because they just don't have the money to buy more things. They're buying the same amount of stuff that they bought a year or 2 years ago, but they're spending more money for it. And that's what that chart reflects. There's been really no real increase in retail sales.
I think it's 24 months in a row now with negative real wages year over year. And I think that's why the polling is awful when it comes to the economy. So, Jim, I wanted to ask you about getting comfortable with the notion that this banking scare was behind us. I got to admit, I was trying to get there, but a couple of things in the last 24 hours. On the Fed's balance sheet, there's this category, loans, other credit extensions. It went from $22 billion to $213 billion. I have no idea what that is. I'm hoping you can help me. And then apparently Janet Yellen saying that there has to be maybe some form of bank consolidation. So now I'm wondering, are we out of the woods yet?
Well, it depends on what you mean by out of the woods. If you're worried that another bank is going to fail in the next couple of weeks or month, I think we're out of the woods for that. But if you're worried that people are going to continue to say, you know, my bank doesn't pay me anything in my savings account, I'm going to move it to a money market fund, and that takes money out of the banking system and puts it into a non-bank, a money market fund, that, what we refer to as the bank walk, should continue. Now, that other loans category is banks go to the Fed and they say, here's some securities, give me a loan for cash so I could meet those withdrawals. So when you see a big jump in lending, it means that they're still getting withdrawals. And my concern is none of those withdrawals fails a bank, but fast forward to the fourth quarter, if this keeps week in, week out for the next 5 or 6 months, these banks will have a serious profitability problem, and then they're going to have a serious inability to hand out loans, and that's what we refer to as a credit crunch that could slow the economy.
Right. I mean, when you go from $22 billion to $213 billion, it is scary stuff. All right, so I want to give a shout out to Brass Ring Drew, because he guessed it. Michelle Bowman is now my new favorite member of the Fed, my first favorite member of the Fed ever. And I tell you why, Jim, a couple things, right? She's saying that she wants them to have targeted rules, right? Let's not just go in there and have radical change that could crush some of these community banks. And she keeps asking for an independent review of what went wrong at Silicon Valley Bank. I think that's necessary. The Fed monitoring the Fed and giving the Fed the okay, it just doesn't pass the smell test.
Yeah, it doesn't. And yes, kudos to Michelle Bowman. She has a specific seat with the Fed. She was appointed to represent the interest of community bankers, and she's finally starting to do it. She's, by calling for an independent commission, by saying we can't consolidate the banking system. That means getting rid of those community banks and rolling them up into larger banks. And so she is looking into protecting their interests. And Charles, count me as one that thinks that the strength of our economy is small banks and medium banks that are aligned with small and medium companies, which employ half of the country, and that we are not better served like Europe, where we have 4 or 5 banks with 7,000 branches each serving everybody in the country. I think the system we have now is better than that kind of system.
You know, Jim, I've always said you're one of the most brilliant guys on Wall Street, so I'm always happy when we agree on something. Jim, have a great weekend, my friend. Appreciate it. All right, folks, coming up, the so-called masters of the universe, right?